Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame 112 scenario, where we are looking for a continuation to the upside in an impulsive structure for much higher targets to come. In this scenario, the 112 is the one I chose for instead of a 1-2 and then continuation, because if you label this whole structure as a wave 2, then it has to be a WXY structure, and in a WXY, wave Y and wave W are not allowed to be of the same family, but in this scenario, wave W is a zigzag, Y is then also a zigzag. That is not allowed and therefore lowers the probabilities. This is a correct count to the upside. So therefore, I prefer the 112 scenario, where this is then still part of a blue wave 3. When we look for this blue wave 3, the 1.618 is usually a minimum target for wave 3, which has been passed. Then we would be looking for the 2.618, which currently is what we are ranging upon. And then we can look for the 3.618 as well, which is at 36k in confluence with this resistance area between 35.9 and 36.2k. And then it also raises the question, is this still a 1, 2, 3 sideways 4, 5 and then wave 3 ending over here? Well, that is definitely still a possibility. However, the longer this range is going to be, the higher the degree of this range is going to be as well. You can see if this is a wave 2 and this is a wave 4, then wave 4 is longer in time than wave 2. That is exactly what you like to see. So that is not a problem. But if this range is going to start to become too big and potentially retrace too deep, then we have to think about this range being a potential wave 4 of a higher degree, which would be more bearish, quote unquote. Reason being that after wave 4, you then have wave 5, green 3, 4, 5, and then you move to the downside instead of the green wave 3 not yet being in, so still higher prices for green 3, then 4, 5, 4, 5, right? So it leads to higher prices basically. Now, as it stands, depending on how this price is going to form, if wave 3 would be in and we are looking for a wave 4, then this is the most common target area, the 236 to the 05, which is between 33.1 and 30.8k, with the invalidation being down here in case price is just going to move towards the downside. If we look at the bearish scenario, we're looking at an ABC over here with an expanding diagonal in a wave A. Not common, but at least that is the way to count this in a 5-wave structure. Wave B retracing to the 382, which is a common target for a wave B. And then this becomes a 1, 2, 3, 4, and then a wave 5. So still looking actually for one move higher, for then a move towards the downside, where a less common target for wave C is the 1.618, sitting at 36.4k. If we then zoom in to this range over here, then there is somewhat a bullish count, I suppose, because actually finding a bullish count is incredibly difficult. So if we have this low and we're going to be looking for the upside, well, if you want this low to be the low and you're going to be looking for impulsive structures, it means that from this low to the upside, you want to look for either an impulsive structure, 5 waves, but no overlap allowed between 1 and 4, which is the case clearly. If you look at a diagonal, then a contracting diagonal is by far most common, but that is already invalidated, especially because then this being wave 4 and a 1, 2, 3, 4, 5 retrace too deep. And a 112, well, if this is a 1, 2, 1, 2, you want to see an explosive 3 to the upside, which is also already invalidated, right? Very low probabilities. An expanding diagonal is something that could be thought of, but also this one is very unlikely, because in a diagonal, wave 2 and 4 have to be zigzag structures, meaning this has to be the high of your wave 1, for then over here a wave 2, and then continuation in 3, 4, and 5. But then wave 3 is shorter than wave 1, which in an expanding diagonal is not allowed. So yeah, it's very low probability at the moment that this low is the low for bullish continuation to the upside, and higher probability that this low and this move to the upside is still part of a corrective structure, and I have a couple of corrective structures coming. However, if we then look at this low over here, because the low of a range does not have to be the pivot low for a impulsive structure to the upside, especially in a triangle or a WXY sideways double combo, wave Y does not have to take the low of a wave W. And in a triangle structure, of course, you don't even want this low to be taken, because if you're looking for a wave E, you want to look for moves towards the upside. So if we look more locally at least and take a peek at this being the low at the moment locally, then the bullish scenario locally for continuation would be this being a wave 1, and then we have a W, X, and a wave Y. W is a flat, X being a double zigzag in an ABC correction, ABC to the upside, and then in wave Y we have a zigzag, and then an A, B, 1, 2, 3, 4, 5 in a wave C. Now this increased in probabilities, at least this being an ABC increased in probabilities, just because of this retracement to the upside over here. Because if we are looking for an impulsive structure to the downside and lower prices after this high over here, you're going to be looking for a 1, 2 and then a 3, 4, 5. However, if this is your 1, 2 and this is your 3, wave 4 retraced to the upside but entered the price action of wave 1. There is overlap now between 1 and 4, not what you want to see in an impulsive structure, and then you have to think about diagonals and that sort of stuff. But with a diagonal, you're not going to get low enough to reach these lows. If this is a 1, 2, 3, 4 and then a wave 5, you only have one little wave left, but you're never going to reach these lows with a diagonal. So the fact that price retraced to the upside and has overlap with that wave 1 increases probabilities that we can at least still expect a bit more upside as well. It has to be said though that the 886 locally over here has been hit, taken from the low to the high, and the 886, very well known target for a wave B or a wave X, increasing the probabilities the move to the upside is a C or a Y, less common for a wave 2 for then continuation in a wave 3. Of course that depends on the reaction in case price moves to the upside, but just based on the retracement here to the upside and the overlap with this structure, it increases probabilities we can still expect a move to the upside. And then it's all about the reaction. Do you get continuation or not? Because we do have a lot of bullish CVD divergences building in this range, and I don't necessarily like to go against such bullish CVD divergences, but of course time will tell. Now this is the triangle A, B, C, D, and then looking potentially for an A wave E and then upside. Reason I didn't put C over here where the A is because this move to the downside looks very much like a three-wave structure if this would then be an A, B, and a wave C. However, in a zigzag, you want to see a 5, 3, 5, another three-wave structure to the downside. So just because of that, I then have 1, 2, 3, 4, 5 for a wave A. But that is also not really nice, lowering the probabilities of this scenario, because if this is a 1, 2, 3, 4, and then a wave 5, then you have to think about an expanding structure. And wave 5 is not longer in price than wave 3. If this is a 1, 2, 3, 4, and then a wave 5 is shorter than wave 3. You can take the trend-based fib extension from then the high over here. Oh, that is a dot from the high to the low. And that's the wrong low, but even that works. You take it to this low over here. You can see where A is, it didn't reach the 1-to-1. So it's also low probabilities that this over here is a 5-wave structure, which lowers the probabilities for this triangle scenario, which in general was a bit like, right? Also because of this wave B and the wick that I got over here, which is not allowed in a zigzag structure. But this wave B being a zigzag is already a little bit doubtful as well. So it's just another thing that I noticed locally, which lowers the probabilities of the scenario over here, where the invalidation, if price moves up and reaches this high, triangle invalidated, and if this low is taken, triangle also invalidated. So for a triangle, preferably, you're still looking for a move down, because this over here that just doesn't look like a nice wave A even, right? Because of expanding, 5 shorter than 3, not allowed. This can't be the end of your triangle as well, because then you want to see impulsive continuation, but the low has been taken. So, we're running out of ideas with that triangle over here. More locally, the bearish scenario was this being A, B, C to the upside, where this is not a double zigzag, but a wave C. It definitely hit the range point of control of this small little range over here as resistance. Very, very nice indeed. And then you want to see a wave C to the downside. But as mentioned, you want to see an impulsive structure. Price here retraced a bit high, including the wave 1 price action here, which is not what you want to see, lowering the probabilities of this particular scenario. And then over here, we have a WXY scenario. Where in a WXY scenario, you're going to be looking for a wave W, X, and then eventually a wave Y to the downside, where then the minimum target is the 0.618, which is on top of this support box over here, sitting between 33.8 and 33.9K. But this is just a just-in-case scenario, and another scenario I do have in the back of my head is some sort of a WXY which is very, very rare to have such a complex corrective structure in then WX and then YXZ, or the WXYZ. But at the moment, I prefer to look more locally instead of looking at the range as a whole. And this is something you will see me do more often as well, that once things become very, very complex in, let's say, a very, very big range, I prefer to pick the low or a high and then just look at the more local price action and then look for the probabilities over here. And if we then compare the bearish scenario locally, this being an ABC, with a potential bullish scenario where this is a 1-2 continuation, well, at the moment, even though the 886 is hit, probabilities are higher to at least take these highs, move a bit to the upside, and potentially that leads to continuation, right? That's something we have to wait and see, especially if price can take this range point of control and flip this in support. Well, continuation becomes very probable, right? So just forgetting about the whole range as in a whole, what I like to do is just look at the local price section, and this is at the moment something that I am then looking for. Now, if we look at the range over here, then you have this range of volume profile. The value area high has been tested very nicely indeed. And yeah, it has been tested a lot, 1, 2, 3 times. You can imagine the more often you test it, the higher the probability you're going to break it. So if you come up here again, probabilities, of course, become high to break it to the upside. 34.6, 34.7K for that range over here. And this is the bullish divergences. So you can see we do have bearish over here. We had a little bit of bearish ones over here as well. They already played out, but you have bullish, bullish, more bullish. There's constantly bullish CVD divergences building, and I don't really like scenarios that go against such bullish CVD divergences. Just look at it. It's crazy. Higher low in price, lower low on yellow, also lower low on blue. Not as crazy as yellow, but still bullish CVD divergences on both the lines, and therefore it increases probabilities that this low at least will not be taken, because this is the pivot low of the bullish CVD divergences that we're looking at over here. But also more locally, you have bullish CVD divergences. And I do think if you look at this build up over here, right, like if it pops, I think it can pop pretty big, right? And we also have news coming up, which is the next thing I wanted to talk about. 3 p.m. Central European time, 7 p.m. Central European time, 7:30 p.m. Central European time. So lots of news can increase volatility. Make sure you trade safe, right? Have a plan, strategy, have your risk management on point, everything on point, just to make sure you don't get baited. And if we then look at the probabilities of the different scenarios, then currently in general, the probabilities are higher for the range highs to eventually be taken. Now, I have been talking previously about the support box over here, right? But seeing this little range to the upside more locally here, probabilities at the moment are higher to at least take these highs and then observe the reaction if price keeps pushing, the yes or the no, or if we fall down, because we still have nice support over here. That's great, but it does mean you have to invalidate the local bullish CVD divergences that we have over here. Now, these bullish CVD divergences play out if price takes this high, right? So then they are neutralized. But if you take this high, probabilities are high, you're going to continue. So yeah, that is like, these are things that I currently have in mind. But in general, on the higher time frame, we still expect price to move to 36K. So in general, longs are preferred over shorts. No financial advice, of course. But also what we see more locally, we do have the potential for a move up, even though the 886 is hit, which increases probabilities. This move up is a wave C or Y, and therefore increases probabilities to move down once more to take this low. So it's a little bit confusing, I can imagine. But let's give price a little bit of time, and the general probabilities in the range are clear, taking the highs. If price moves down, this is an area of interest for me. If price moves up, that's perfectly fine. This is an area of interest as well at 36K. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.